lots, and position size. In this video, you will learn what is a pip, what is a spread, what is a lot, how to calculate profit and loss, and different types of orders. So, what is a pip? A pip, or point in price, is the smallest price change any given exchange rate can make. For other instruments like indices and shares, the minimum price movement is called a tick. For currencies, it is usually the fourth decimal point of the price. So, if we consider the price of the euro against the US dollar, it is 1.1358. The next price it can have is 1.1359. The difference is 0.0001, or in other words, 1 pip. Some platforms, however, offer prices in 5 decimal points. So, if we consider the price is 1.13575 and the next price is 1.13590, the difference is 0.00015, or in other words, 1.5 pips. US dollar pairs and other currency pairs are quoted in 4 or sometimes 5 decimal points. For example, the euro against US dollar is quoted 1.1958 and sometimes 1.19582. All Japanese yen pairs, on the other hand, are an exception as they are quoted in 2 or sometimes 3 decimal points. For example, the euro against the Japanese yen is quoted 110.45 and sometimes 110.454. Instruments are quoted in bid and ask prices. Bid is the price at which you can sell the instrument. The ask is the price at which you can buy the instrument, and the bid price is always lower than the ask price. The difference between the bid and the ask price is the spread, and it represents the cost of the transaction. In our example, the spread is 1 pip on the euro-US dollar, 2 pips on the British pound, 1 pip on the dollar-yen, $0.4 on gold, $55 on Bitcoin, 0.8 units on US 500, and $0.2 on Facebook. As you might have noticed, the spread varies from one instrument to another. On the MT4 and MT5 trading platforms, instruments are always traded in specific amounts called lots. In Forex, one standard lot is 100,000 units of the base currency, and one micro lot is 1,000 units. For euro against US dollar, one standard lot is 100,000 euros, and one micro lot is 1,000 euros. The British pound against the US dollar, one standard lot is 100,000 British pounds, and one micro lot is 1,000 pounds. US dollar against Japanese yen, one standard lot is 100,000 US dollars, and one micro lot is 1,000 US dollars. In commodities, stocks, and other instruments, a lot represents the number of units of that instrument. For gold, one standard lot is 100 ounces, and one micro lot is 1 ounce. For some instruments, the standard lot and the micro lot are the same. For Bitcoin, one lot is 1 coin. US 500, one lot is 1 unit of the index. Facebook, one lot is of Facebook shares, is 10 shares. The profit and loss is calculated by multiplying the amount traded with the pips gained or lost. For example, if you buy one standard lot of euro against US dollar at 1.1358 and sell it back when it reaches 1.373, you will earn 0.0015, or 15 pips. By multiplying this number by the lot size, you will get your profit in the quote currency, which is 0.0015 times 100,000 equals to $150. When the US dollar is the base currency, your profit or loss will be floating. If you buy one standard lot, US dollar against Japanese yen, at 110.50, and sell it back when it reaches 110.90, you will earn 0.40, or 40 pips. By multiplying this number by the lot size, you will get your profit in the quote currency. Here, 40,000 Japanese yen. To convert the 40,000 Japanese yen to US dollars, you will simply need to divide the profit by the closing rate of the trade, and by using 110.90, which is the closing rate, we net $360.68. In commodities, the profit and loss is calculated by multiplying the amount traded with the dollars gained or lost. If you buy one standard lot of gold at 1,205 and sell it at 1,200, you will lose $5 per ounce. The profit or loss is calculated by multiplying the dollars gained or lost by the amount traded. As one lot equals to 100 ounces, your loss is equal to $5 times one lot times 100 ounces, which is $500. The profit and loss is calculated by multiplying the amount traded with the dollars gained or lost. If you buy 15 lots of Facebook CFDs at the price of $177 and sell them at $178.1, you will gain $1.10 per share. The profit or loss is calculated by multiplying the dollars gained or lost by the amount traded. As one lot equals to 10 shares, your profit is equal to $1.1 times 15 lots times 10 shares, which is $165. In indices, the profit and loss is calculated by multiplying the amount traded with the points gained or lost. If you buy 100 lots of US 500 index at the price of $2,644 and sell them at $2,660, you will gain 16 points. The profit or loss is calculated by multiplying the points gained or lost by the amount traded. As one lot equals to 1 unit of the index, your profit is equal to 16 points times 100 lots times 1 unit, which is $1,600. A market order is the most basic and common type of order. This type of order executes the trade at the best available price at the time the order is received. You may use the market order to enter a new position or to exit an existing one. Bid price is the best available price to sell at. Ask price is the best available price to buy at. Prices always display the highest bid and the lowest ask available. In addition to market orders, traders can place pending orders. Pending orders are orders that will be executed when the price reaches a predetermined level. They are categorized into limit orders and stop orders. A sell limit order is used to sell higher than the current market price. A sell stop order is used to sell lower than the current market price. Buy limit is used to buy lower than the current market price. Buy stop is used to buy higher than the current market price. A trailing stop is a stop order that is set based on a predefined number of pips away from the current market price. A trailing stop will automatically trail your stop loss as the market moves in your favor, and maintain its level when the market corrects in the opposite direction to protect your profits. If the market moves against you by the predefined number of pips, then a market order is triggered, and the stop order is executed, closing the open position. In our next